As a naturopath, I see firsthand how financial stress can take a toll on our physical and emotional well-being. That's why in this special series, we're exploring the powerful connection between financial health and whole body health, because true health includes your bank balance as well. Today, I'm thrilled to be joined by Lauren Hall, an incredible mortgage broker who is on a mission to make financial literacy simple, accessible, and actually fun. Lauren has a real talent for breaking down the finance world in a way that just makes sense. And she brings that energy to her own podcast called Mad Money, where she dives into money topics without the jargon. I highly recommend listening to it. Whether you're planning your first home purchase or just want to get smarter with your finances, Lauren's insights are going to be a game changer. So let's dive in. Lauren, thank you so much for joining us today.
My pleasure. Thank you for having me.
Can you tell us your definition of financial literacy and how did you actually become interested in it?
Yeah, so the definition around financial literacy is the ability to make educated and informed decisions around the management of money. And I really became interested in it mainly because of what I do for a living, because I spend a lot of my time talking about things like budgeting, breaking down income, looking at outgoings and expenses, and basically looking at the different ways people manage money and how that impacts their ability to get ahead financially.
Mm. And on that day-to-day basis, you are talking to people all day long. How do you help people reach their financial goals? So, in order to reach that great Australian dream of owning a home, how do you help them achieve that?
Yeah, perfect. I'm a mortgage broker, so primarily my business helps people get loans from the banks to buy property, whether that's their first home, whether that's an investment property or a commercial property. So that's the fundamental purpose of what my business actually does. Interestingly, I actually spend a lot of my time more around discussions about how we can be more effective in using money. So that's that financial literacy piece. And that is a lot of time around maybe working towards the goal of buying property. So, how can we get in a better position to be able to do that? How do the banks look at us or view us when they're assessing our ability to pay off a debt? And then strategies around when we've got that, how can we make our money work harder? So, how can we save money and interest? How can we get ahead? How can we leverage equity? Those kind of things. So, very strategic and long term relationship focused. But I find rather than the solution being here's a home loan with the best structure and the best rate, that's amazing. But my value over time has become more about let me be the person that's honest and direct and can tell you truthfully things that we can do to improve our position. And I have an advantage because I see people's full picture. I sort of joke that I know more about you than probably your partner does, or mum and dad, or your friends or family. There's a lot of disclosure, obviously. And so I have an ability to see the full picture, and making a decision, an effective decision, you do need to be able to do that with all the pieces of the puzzle there.
Mm, I think that's really interesting. And when I think about your role, traditionally maybe it was simply to help somebody secure a
Mhm.
loan, but
Yeah.
definitely the way that you've interpreted that role is way more about financial education and literacy than
Mhm.
just supplying a loan. And I think that maybe is a hallmark of a really good mortgage broker is somebody that sees it as a bigger role and a bigger opportunity than just to get the deal done is actually I want to leave this person better off than where they were when I first came across
Yes.
them, to
Yes.
better their financial literacy. I can see that you're really passionate about that.
Yeah, and you're correct. At the end of the day, I don't get paid for those longer
Mm,
discussions, all that support, all that help. But when we look back, it's not something that we learned at school. It's not something
mm,
sometimes that our parents educated us around. And I have a little bit of well, it's not my saying, of course, it's a very old saying, but the concept of give a man a fish, feed him for a day, teach him how to fish and feed him for a lifetime. And I go, well, I can get you a loan, but if I can teach you about how to manage your money better and more effectively, I'm setting you up better long term. And it's
Mm,
funny you say that about, leaving people in a bit better position than when you found them. I love that concept of leaving things in a better place than they were before we were here or we found it. Yeah, it is.
mm,
I'm passionate about it. And I think in financial services, we have a duty of care
mm.
to impart that knowledge to our customers and also to the community. I think either A, we don't do it, and B, if we do, we don't do it well enough. And it's something that brokers, banks, all of us professionals in that industry, we need to start to make it more of a priority and use our skill set in a way where we're actually going to help people more long term.
I think that's just so critically important. When you think about it, when you zoom out, how early should someone start preparing financially if they want to buy a home? Or what key habits does the bank want to see? Basically, I'm
Yeah,
asking you for a bit of a cheat sheet, but what
yeah,
key
yeah, yeah,
habits
yeah.
do the bank want to see in order for them to be approved by a bank?
Yeah, perfect. There's a bit of a joke, which is you kind of need to show the bank you don't need the money for
Yeah.
them to give you the money, right? So one of the things we talk about is propensity. So that's your ability to demonstrate that you can meet the commitment. So that might be
Mhm.
things like through renting or saving. The classic one is if we're living at home, right, and we're not paying rent, we're paying a very small amount of board, and we might be gifted a deposit. Well, that's great, but how can we actually provide a bank with comfort that we can meet, a $500, $1,000 a week mortgage commitment? So that's that propensity piece, and we have a lot of discussions around that. Budgeting, it's not new,
Mm.
but there is a lot of empowerment that comes with understanding where your money is going. And we can't make changes or decisions unless we really understand that. It's not great. We all love to bury our head in the sand. I hate budgeting, but it gives clarity. And I talk to people who are stressed or anxious, and it's because they don't actually understand the numbers. So I go, well, let me be that person that can break it down for you. I'll tell you, hey, we need to stop spending here, or this is what we might want to change. And at the end of the day, everyone has a preference around their lifestyle. So if someone says to me, hey, Lauren, it's really important that I can go out on a Friday night with my family and we can
Mhm.
go out for dinner and spend this much money, that's cool. It's your money at the end of the day. But we just need to make sure then that we're comfortable with our commitments, allowing that to stay. My encouragement around when should you look at this, I think as soon as you start working, you should get into a space of budgeting, and our young people are working earlier now. They're at school
Mm.
and they've got part-time jobs. So we need to get into a space where we're learning to budget. And then as soon as we go, hey, buying a home is something we want to achieve, we need to understand what's available to us from the government, how much do we need to
Mm.
save, what kind of income do we need to earn, and do we feel that we can comfortably meet that mortgage payment? So I'm talking to people 3 to 6 months out, basically breaking down these are the things the bank's going to be looking for. And then we're checking in to see, I can keep you accountable. How are we going? Are we working towards that?
Wow, Lauren, you're almost like a money coach, getting people ready to put
Yeah,
in that application. I
yeah,
guess for you, you want them to be approved when you put in that application. You don't want
correct.
them to be knocked back because not great for credit rating, but also from that
Yeah,
morale around money and financial literacy, you're trying to
yeah.
empower them to get them in the best place possible, which I think is amazing. And I know you've been doing some financial literacy work with high school kids. As you mentioned, kids are working, from
Mhm.
part time from a young age. What simple financial concepts do you wish were taught in high school that would really help these kids be more literate with their finances?
Things just as basic as understanding how to read a payslip. How is tax calculated? Are we being paid correctly? Even things like we look at the Fair Work websites. Are we being treated fairly? Or, are we being paid correctly based on our income brackets and things like that? So
Mm,
there's that part of it, which is just giving them the confidence and the courage to go, okay, I know what I'm entitled to. And then when I look at that demographic, that are already working, that are senior students who are pumped on social media with buy this, have this, get it now. The first thing they're going to do is not going to get a home loan. So it's
mm,
pointless me discussing that with them. I tackle things that I know are going to be tempting or in their face first. So as soon as they turn 18, it's going to be the afterpays, the zip pays, the credit cards. They're already working, so they're earning income. They're probably going to qualify. to be able to borrow these things. Their first car loan. So understanding how compound interest works. How do I read a statement? I get my credit card in the mail. What does this mean? How does the interest work? If I just look at the minimum payment on the statement, well, am I actually paying the debt off? How long is that going to take? Things like a car loan contract, you're required to have insurance on the car
Mm.
when you have a loan on it. So if you're breaching the terms of your license, I don't know, you got passengers or it's hours or whatever, and you have an accident and the insurance doesn't pay out, well, what happens to the
Oh.
loan? Right? You might be fine, everyone might be okay, but the insurance company might say, hey, you were breaching the terms of your license, right? So what does that mean for the loan? Does the loan just disappear and go away? Well,
Mm.
no, we still have to pay that loan, but now maybe we don't have a car and we might have needed that car to get to our job to
Mm.
earn the income to pay the loan. So just little things like that. When you're reading a car loan contract that's 50
Mm.
pages long, they're just going to go, or it's all DocuSign now, right? So it's just
Yeah.
tap, tap, go. We don't even read it to
Mm.
go, hey guys, grab these things. And I said, my number one encouragement for you is don't sign there. Take it home and just sleep on it or read it or ask someone just so you know what you're agreeing to. And
Mm.
these kids are smart, man. I'm standing there talking to year 12 students that are studying economics and business. Like, I'm not going to tell them how to work the numbers out. I just want to give them some practical advice. And I know they're switched on and are little entrepreneurs to go, okay, I can ask that question, or this is what I need to look for in that
Mm.
document. And I hope they
Mm.
take it home. And I hope they share that with mum and dad and their siblings. And I've got a couple of big mic drop moments in there for some things that they all go, oh, wow. But they respond really well.
Yeah, I think financial literacy as a teen is such a gift for life. And I think
Mhm.
back to when I was a teen, and I remember in my late teens, I got a letter in the mail because it was a long time ago now where you got letters in the mail. And the letter was from my bank, and I had a credit card that had $2,000 limit on it. And they said to me in very flowery language that I had now been approved for a $9,000 credit card, and all I had
Mhm.
to do was go into my nearest branch and say yes and sign the paperwork. And at the
Mhm.
time, I remember my first reaction was one of like I'd won lotto. I was
Yeah,
so excited. I felt so special because I'd been approved. I mean, I didn't even think, what have I done to be approved? I didn't think logically about it. I just thought, this is amazing. I can't believe this. I've now got
yeah,
$9,000 instead of $2,000. And it
yeah.
wasn't until a good probably 2, 3 years later that my credit card was up at around $9,000, i.e.,
Mhm.
I'd spent that money. And I
Mhm.
remember thinking, I don't even know what I spent that money on.
Yeah,
I've got nothing to
yeah,
show for it. I've
yeah.
now got a debt that it was at that point in time, it was around 17% interest. And I remember feeling like I
Mhm.
was starting to chase my tail on this debt.
Mhm.
That's one of the sort
Yeah.
of light bulb moments I had of, oh my God, what have I done? I didn't know how to fix
Mhm.
it. I didn't know any more than that sinking feeling of, what have I done? So, what are some
100%.
common mistakes that you see people making in the space of finances?
Yeah. So credit cards is a big one. And yes, you do get sent letters and you're approved for higher amounts. The biggest tip I have on credit card statements, and again, we get these on internet banking now, so no one looks at them.
Yeah.
We turn all our notifications off because they're annoying, so we don't actually look at anything. So your credit card statement will have a minimum payment up on the top, probably up in the right-hand corner. That doesn't mean you're going to pay your credit card off. Interesting you say about the $9,000 credit card, because that's actually an example I use with the students, and I show them, it's actually a client of mine. We take all the data off, obviously, but it's an actual credit card statement. And this card has $9,000 owing on it, interest rates in the 20 odd percent, which is normal for a credit card.
Yeah.
And in the top right hand corner, it's got a minimum payment. It's about $170 a month.
Okay.
Now, you would reasonably think, well, yeah, I'm going to pay some interest, but 9 grand, if I paid $170 a month, you'd probably think it would take a couple of years to pay that off. For me, that would be a reasonable, acceptable time frame. But on the bottom of the front page, that first page, it will actually tell you how long it would take you to pay that card off and how much interest you would pay. Now, remember, interest compounds on credit cards. making the minimum payment, it would actually take 122 years to pay off, and you would pay
Oh my God.
93,000 in interest. And they react just the way you did. Mental. Okay. But if you paid an extra, if you changed the payment from 170 a month to $300 a month, then you would pay it off in 2.5 years and you might pay 10 grand in interest, right? Huge difference. But that's why when you say, I'm not going anywhere, I'm making the payment and nothing's happening, you're not paying any principal off.
Mm.
You're only paying the interest in, and the interest is calculated on the interest and then on the interest and on the interest. So I'm on a bit of a war against credit cards because I do not understand how that is
Yeah.
okay. And it doesn't require a $9,000 balance on a credit card, I wouldn't say is significant. Okay. It should not be an amount that puts someone into hardship or mean that these kids go, oh, someone said to me, just don't pay it and I'll go bankrupt. I get
Oh,
that kind of stuff from
okay.
small bits like that. Okay. So we want to understand how does the facility work? And I've done a lot of research around things like stress that's attached to non-asset backed debt, which is what you're
Yes.
saying. So I
Yeah.
get a credit card and I go on a little trip and I buy some stuff and I do things and we've got no asset. And there's a lot of stress that's associated with us paying that off because we can't see the asset attached to it. It's not a car with a car loan necessarily or a house with a mortgage. What is that? Again, we've got to understand these are credit facilities and have a plan around how to pay these things off before we take them out.
Yeah. And one of the big emotions I felt was shame. I felt so stupid. And that to me, that really was like a knife. That one really hurt. I was like, I'll deal with the money, like I'll work it out. But
Mhm.
I felt so stupid for not realizing sooner
Yeah,
what mess I was in and that I had nothing to show for it. It was that feeling of shame and stupidity. And then I didn't want to talk about it to anybody because of those
mhm.
feelings. So I just, in my own little
Yeah,
world, trying to make
yeah,
extra repayments and not talking about it and sharing
yeah.
that shame. I would do it so differently now. But it's
It's
great
cool.
you are getting in there, raising the awareness on these topics and
Yeah.
speaking to kids because I just think that's so important.
100%. And money makes the world go round. So we
Yeah.
can't ignore it. We don't agree with how the system works or tax works or
Yeah.
politics. Doesn't matter. At the end of the day, we are living in it. So we have to figure out how it works. And again, I know for me personally, and I've been the same with you before, Emma, and I only know this because of what I do for a living. Okay. I wasn't taught this at school. Mum and dad didn't teach me this stuff. So again, I feel like I'm in that unique position of going, well, I only
Mm.
know this because it's what I do for a living, but not having clarity, not understanding where you can get help or support means that people don't reach out or they don't get help or they're fearful and then they don't want to make decisions around maybe times where we could leverage the bank's money
Mm.
for something that is actually going to help us get ahead because we're so gun shy about it because we've had such a
Yes.
bad experience.
Yeah, I would agree. And when it
Mm.
comes to resources or tools, are there any apps or books or online tools that you recommend to help people build their financial literacy?
Yeah, so the ASIC Money Smart website's actually really good. There's some
Okay.
great budgeting tools and their goal saving
Mm.
tools. Most of the bank's apps now have things like Track My Spending. Again, that's
Or-
linking into budgeting. So you can categorize different things, see where your money is going. You
Mm.
can't make any progress unless you know where your money is going. That's the first thing because we're running blind. So that stuff's great. I know we have on our website some great tools around stamp duty calculators and borrowing
Mm.
capacity calculators and things again that we can just play with to get a little bit of clarity. As far as books, there's a famous book called Rich Dad Poor Dad by Robert. It's very old, but again, it shifts your
Mm.
approach around money and how we view it. But I think just getting clarity on what you're earning and what's going out is probably the most powerful tool that you have because it will
Mm.
allow you to make informed decisions and give you clarity rather than going, yeah, that sounds fine, we'll
Yeah.
make that work.
Yeah, I do remember vividly when I started tracking and budgeting seriously, like
Yeah,
actually properly, not just, oh, yeah, I do that. I was surprised at the hidden expenses that I wasn't consciously aware of. Have you
yeah.
got any favorites that you see quite repetitively in people's spending, like things that they're
Mhm.
just not aware of that
Yeah.
easily?
Yeah. So your subscriptions are the biggest one, right? We live in a subscription world, and from what I've heard, the subscription business model is quite lucrative. And for people who are entrepreneurs and looking at some type of business, I know that seeing if you can make that a subscription model is considered quite savvy around that because they're little amounts that come out and we don't notice them. Okay. So things like our gym memberships is a classic. Everyone knows it.
Yes.
Things like Netflix, Stan, Spotify, Prime, insurances is another one that we pick up a lot. Sometimes people will have double insurance policies or thought they'd cancelled something and it's
Mm.
still coming out. ATM fees, late payment fees, all that. It's just a waste of money, all that stuff. So the little pieces, the subscription things that we maybe sign up to might be free for a couple of months. The other sneaky little things that get away on us.
Yeah, I can vouch for that. I had multiple, it was the subscriptions that I was like, oh, goodness me. And then I added it up over 12 months and I was like,
Yeah,
oh my gosh, that
yeah.
actually does make a big difference if you
Hmm.
zoom out and look at the cumulative effect of those payments. So it does
Yeah,
pay, if there's one step that people watching this can do is literally print off your internet banking statement, go through every expense, every line item, and justify it.
yeah, 100%. And I say someone's getting the money. Either you're getting it or someone else is getting it, right? So don't ignore it. Don't think, oh, it's only $5 or $10. Well, someone's getting it. So why isn't it you?
Mm.
And we prioritize other things, mental health and physical health, but also our financial health is really important as well. As with always, with all things, the earlier you start, the better. If we're looking at saving or if we're looking at working towards a goal, the earlier you start, you can start small and it will build over time. Any of my clients that maybe are young couples that don't have children yet,
Mm.
or are single and don't have lots of expenses or overheads, it's going, this is the time now that we can really make our money work harder when we don't have those other commitments.
Yeah. And, I would definitely vouch for there's certain life stages where it's easier to be saving, in the
Mhm.
life stage of, maybe you've got a big mortgage, you've got kids, school fees. Sometimes there's
Yeah,
some points in your life where it is hard to be saving and
absolutely.
paying extra. So you need to kind of think about that of when there's times where you
Mhm.
have less expenses and maybe more in the budget that you
Yeah,
could be saving to
yeah.
make up for the times and life stages where it's a little harder.
100%. And things like, if you've got loans or mortgages or property, is rounding things up a little bit. If it's, I don't
Mm.
know, $976 a week, make it 980 or 1,000. The rate drop we were hoping for today, that hasn't happened. Keep your payment the same. Don't let it drop
Yes.
back. Put an extra 10 or $20. Again, over time, compound interest rate, it makes a huge difference. I looked at one yesterday and it was a $600,000 mortgage, $50 extra a week saves over $100,000 in interest. Compounds over 30 years. So just little things like that. Because, what's the point of sitting there and saying, oh, well, if you paid $1,000 a month extra off your mortgage, how pointless. Oh, you'd pay it off in 5 years. No one's going to do that. We can't, with the cost of living, it's not reasonable. So we've got to find ways to make it feel really achievable and make sure it is achievable so people feel that they can do that. It's not too big or it's too hard. But again, showing them the facts around a
Yeah.
little bit does make a difference, makes people go, okay, we can do this.
Yeah, and I would have to say, I love the way that you come in from this empowering angle. And I think if somebody sees, wow, $50 extra gives us
Mhm.
this net result, it's so
Mhm.
motivating. It's so
Yeah,
empowering. And it's such like you really want to lean into that. It doesn't feel
yeah,
restrictive. It doesn't feel like you're punishing yourself or that you're missing out on anything. So I love that
yeah.
you swing it around so that it feels so much more positive.
100%, because we all have a lot of stress and we have a lot of
Yeah.
pressure and there's all these things going on. So if we make it too hard, we're not going to do it, right? It's going to
Yeah.
go to the bottom of the pile. So for me, it's because we work with clients for life. I go, I'm not, I'm going to help coach you get to transaction number one, property number one, but sounds creepy, but you've got me for a really long time. So
Yeah.
I can be your accountable person. Let's talk through over these things are going to change, but let's work out based on where you're at in life. What's one little strategy we could do for that time period, whether it's a year, 5 years, 10 years, whatever that period in your life is, that makes a difference. And then we'll review it and we'll change it. Like you say,
Mm,
kids in schooling, mortgages are high, certain times in our life are different. It's going to be more expensive than when they
mm.
leave home or when you're young and you haven't got children yet. So we're just got to tweak things and change them and just do a little bit that's achievable. And I love that. I think for me, that's what it's about, actually helping to make a difference.
I can see that you really care, which is so beautiful. And,
Yeah.
I'm always talking to patients about how I feel that they need to have a healthcare team around them. They need to have a good GP, a good
Yes.
naturopath, maybe a good
Yeah.
physio, whatever it might be. So when it comes to finances, I'm thinking the exact same way. Need a good mortgage broker, a good financial advisor, or whoever else is in their financial health team, because when our financial health suffers, it creates physical stress within our body, like you
Does.
mentioned. And so the two are really important. I think both
Yeah.
are equally as important. In your opinion, who do you think should be in a financial health team for somebody?
I think definitely your mortgage broker, of course. Financial advisor can be great.
Yep.
So again, depending on what your goals are, there is certain advice that is out of my scope of expertise. So that fits more into there. And that might be around growing wealth. That might be strategies around tax reduction or, maximizing tax offset, those things, superannuation, an accountant, of course. So
Mm,
someone who can provide you with some advice. An accountant that's more of a planning accountant as opposed to just doing your tax at the end of the year. So, we can start to work together and we do a lot of that. I have a lot of accountants that I know and solicitors and financial advisors, and quite often I'll say to the client, "Oh, I know your accountant. Can I reach out to them and get an understanding from them how they would like this structured or what their plan is for you? Because that will help me
mm,
line that up, right? Because the client's in the middle of that. So
mm.
you want to have professionals, not Eddie the expert at the barbecue, not dad who's in his 70s who borrowed
Yeah.
money in, the 80s. It's so different now, right? It's a different
Yeah.
world. And they paid 17% interest, and what are we whinging about? You need people who are on the ball now. You've got to connect with them. You've got to feel
Mm.
like they care. Like I said, there's a lot of disclosure. I know a
Yes.
lot of people and I need them to feel safe and feel like I genuinely care. So find your people. We call it an A team, but definitely
Yes. Mm.
financial space.
Mm.
And I know you do a lot of work, Emma, around stress
Yeah.
and physical health and things. And even something I was looking at said that, if we have between 1 and 2 months savings, so enough savings to carry us through our expenses for 1 to 2 months, our stress levels drop from, 70% down to
Mm.
13%. Just one
Amazing.
little
Yeah.
things like that. And obviously you understand the impacts that stress has on your health and everything else. So
Yeah.
it is so interconnected.
That is so powerful. The synergy of that
Yeah.
too can be really incredible. So if somebody
Yeah.
wants to do one little thing to get them more confident with money, but they just don't know where to start, what daily action or regular action would you recommend them to start doing
Yeah,
from
cool.
today?
Aside from the budget, okay, I
Yeah.
love the budget, but I know everyone's going to roll their eyes. If you have any type of debt, mortgage, car loan, whatever it is, to be fair, go through your budget and work out where you can find a little bit extra to pay off that
Mm.
each week and do it now. It
Yeah.
is the most powerful way to pay your debt off quicker and save money, and it's free. You're not
Yes.
paying for any type of fancy niche product. You don't need a special type of home loan. There's no penalties. That pays principal off debt. There's no extra interest charged in that. Everyone can do it. I know if I said to you I could find $50 a week, I can find $50 a week for everyone. You
Yes.
probably wouldn't even notice that you don't have it. Making that little extra payment off debt, and maybe the one around checking your subscriptions and just seeing again, where is your money going? Find the
Yeah.
lost money.
Yes. Okay. So everyone is going to go find the lost money. They're going to go and
Yeah,
find $50 extra a week that they can put
yeah,
in to service their debt above and beyond their regular payments. And maybe in 20 years, they'll come back and thank you because they will have made exceptional progress with that one little tip.
absolutely. Absolutely, 100%.
Now, last question for you, Lauren. Where can people find you if they'd like to work with you and learn more about you?
Oh, awesome. Yeah. Obviously, my website. So I have a loan market franchise on the Gold Coast. So a quick Google search for Lauren Hall Loan Market Gold Coast and you'll find me. We have a podcast. So that's great. And again, that's free advice tailored to each generation. So there you'll find lots of free advice on there. Obviously, your Instagram, Facebook, LinkedIn. It's really educational, but if you want to see what's happening or get some tips around how you can get ahead, definitely jump on one of those platforms or reach out. Would love to help.
We will put all those links in the show notes below. And I guess just a reminder that people don't need to live on the Gold Coast to work with. You
No,
can live anywhere in Australia. So just a reminder, if
yeah,
you're thinking that you can't work with Lauren because of where you're located, that's not true. You can help anyone anywhere in Australia.
sure can. I actually have clients that are overseas as well, so I can help anyone anywhere
Wow.
in the world, to be fair. Yeah,
Amazing.
and that's the great thing about technology now, right? We do have COVID to thank for that. So
Yeah.
we work with clients all over the country.
Fantastic. Well, thank you so much for your time today, Lauren. I
My
really
pleasure.
appreciate it.
Amazing. Thanks, Emma.
No
Bye.
problem. Thanks so much for being with me today. Don't forget to like this video and hit the subscribe button below. Check out all the links in the show notes for more financial empowering information. And please ask any questions in the comments below.